in some ways we're in a bubble, in some ways we're not. The key thing, though, is I think that in as much as we are in a bubble, it tends to be a private market bubble, and the private market bubble doesn't have as much public market impact. So I think that it's not something that when you hearken back to kind of 2000, 2001, you worry about quite as much.
So we are in a bubble in the private markets, but we are not in a bubble in the public markets.
And a quasi-bubble.
I talked to your colleague, Anil Bousri, who said something similar. Bill Gurley, on the other hand, says we're at an inflection point headed towards catastrophic events. Mark Andreessen, on the other extreme, saying we're in a long-term bust and tech is undervalued. Why is there such a diversity of opinion?
So I think the question comes down to is how much do you believe that new things will be invented that will be solutions to the problem that aren't invented yet? So inherently, you think in networked age, you can build companies from essentially an idea to something really like globally relevant in 3 years, 4 years, 5 years. I mean, you look at Uber, you look at Airbnb, you look at Dropbox, you look at these new coming companies, and they can move very, very fast to global relevance. And they can be important to affect all industries. So that's the bull case that says we'll create more of those. Actually, in fact, technology will be part of the solution, not part of the problem. And that's what we should focus on. On the other hand, you kind of go, well, okay, a lot of investors are betting on this very broadly. And so you get valuations where you look at a specific valuation and you go, why is that valued that way? And the answer is people aren't really kind of distinguishing very sharply between which companies really benefit from a globalized networked age and which companies do not. And that's, I think, the key issue where it breaks between the bulls and the bears.
So here's my question, and our terminal clients are really interested in this topic, so I'm going to push a little bit on it. But is it really subjective whether or not we're in a bubble? Like 1999, no one would dispute in retrospect.
Well, no one ever disputes bubbles in retrospect, right? That's not actually the test, because then it was like, okay, clearly that was artificially inflated and had a recorrection that was serious. I think the question comes down to, you say, look, it looks like some of these valuations are high, especially on the private market side. When you can pinpoint specific companies, which I won't do because I think that's impolite, to say, well, that one seems a little crazy, and you can see things where private valuations have been much higher than when companies go public, but that actually means that the public market's not being as affected as much. And so you get those kinds of things where you say, look, there's clearly some elements of a private bubble. However, the key thing comes down to is I actually think that we are going to see more of these companies that go from 0 to 1 billion members in less than a decade that actually, in fact, have global impact.
Are you seeing down rounds?
Not privately yet.
But we are seeing them publicly.
Yes.
Like Square, for example, is going public later this week. Yeah. Is the IPO the new down round?
Well, if private market valuations continue the way they are in the later rounds, then we will definitely see more of those. Although the inflection point you see is it's essentially like it's a protection. Like those investors who said, okay, we essentially get a ratchet protection such that we invested at the current price, X years ago, 2 years ago, I think it is. And then the other ones, when you choose the companies that are actually really going up, you win on those.
What do you make of the Square situation? We'll use them as an example because that's happening this week. Raised money at a very high valuation privately, going public at potentially a lower valuation. We don't know for sure. But what do you make of that journey?
So, well, I think what happens is, and this is the reason why I think there's like this quasi-bubble in private, is public markets have a lot of interdependent feedback where people can see other people buying and selling and other kinds of things, and so they can kind of stabilize at a price. Private, it tends to be the player that puts the biggest check forward. So it's very easy to get an inflated valuation because someone gets particularly excited about this, jumps in at a higher valuation, believes the upward trajectory of the market, and goes into it. But that doesn't actually affect, things like the internet bubble did, pension funds and everything else as much because it's a very focused kind of small position. It's not a general public market position. And so I think we will see more of them because I think people are trying to figure out what are the next Airbnbs, what are the next Ubers. They're trying to figure that out. That actually really matters to them economically. And then sometimes you guess wrong.